Hey everybody, Rob Booker here. Welcome to our lessons on FX Trading 101, sponsored by Forest Park FX. I'll have a word about them later on in the lesson. I'm glad to have you here. I've been a trader for 18 years, and I'm the best-selling author of Adventures of a Currency Trader. It's nice to see you, and it's nice to be with you. Remember, trading involves a substantial risk of loss and is not suitable for all investors. If you're interested in trading currency, or FX, or Forex, or foreign exchange, I want to, in these lessons, help you learn what the basics of trading FX are, how the market came to be, what the basic software that we use is, and maybe get you started on your first very simple trading system. All right, for years and years and years, all currency trading was done directly in between banks, and a lot of it was done in the 80s and the 90s between banks, bank number one and bank number two. Citibank to Lehman Brothers, Deutsche Bank to Citibank, or whatever. And these banks would trade currency with each other, not even necessarily using computers, but they would trade using even the telephone. And they would trade on phone calls in between each other, and then on computer systems to each other, and that was called the interbank market. Banks traded in between themselves and would settle up their transactions at the end of the day. And an ordinary investor like you and I, we had no access to this whatsoever. It wasn't available to us, and only super high net worth individuals would ever trade inside of this system, or companies would trade inside of this system. So a manufacturing company might want to buy $100 million worth of Japanese yen. They would call a bank, and the bank would give them a quote, and that would be the process. And these transactions were very expensive. There were really wide spreads and transaction costs, and it was terribly inefficient, even after the computer systems came online and they were trading via computer. So around 1998, 1999, a group of people, a small group of people to begin with, sort of invented the idea that an ordinary trader like you or me would like to trade currency, or FX, Forex, or foreign exchange. And so these individuals would set up what is called a Forex dealer, or an FX dealer, an off-exchange FX dealer. And by off-exchange, I mean there's no central stock exchange for currency trading. It's all done between banks. There was no central authority, no central clearinghouse, and quotes would be different between banks and whatever else. And these beginning first FX dealers wanted to offer a product which allowed ordinary investors to trade currency. And so what they did was they put themselves in the middle between the banks that would trade currency and you and I. So what happened was, I'll step off to the side here. So what happened is you would make a trade to an FX dealer through a computer, and then the FX dealer would make a trade with the bank to clear those trades. And so in 1999, 1998, the year 2000, the retail Forex market was born. And now, this is a giant market. Billions and billions of dollars in transactions are done every day. So now, across the world, there is a three-layered system. And this three-layered system looks like this. FX dealers in the middle, so there's the FX dealers. You and I trading with those FX dealers. And then banks up here. Now, there still is no central exchange. There's no central exchange. There's no central settling of any of these quotes. And so FX dealers can quote slightly different prices to different traders. And there are hundreds of FX dealers around the world which get their liquidity from banks. So banks will quote prices to FX dealers, and then FX dealers will quote prices to you and I on our computers. Then we can take that price to buy or sell, and then the FX dealer, in most cases, offloads that risk to the banks. Now, we'll talk more about what an FX dealer does, and we'll talk more about how they quote a little bit later on. But that's the currency market as it exists. There are still banks trading with banks, And then there are FX dealers trading with banks, and then you and I trade with those FX dealers. Even individuals now with really large trading accounts, even $10 million accounts, are trading in some cases, or in a lot of cases, directly with an FX dealer who then will transact business with a bank. All right, so all these lessons are brought to you and sponsored by Forest Park FX. Those are my friends. If you're interested in FX trading, you can contact Forest Park FX to get cashback rebates on every trade you place. You can go to forestparkfx.com. Remember, terms and conditions will apply, and Forex trading carries a significant risk of loss. I will see you in the next lesson.